Okay, we have to talk about Rivian. Just to be clear, I do not follow Rivian anywhere near as in-depth as I do Tesla. I focus mostly on Tesla only. I like to concentrate my knowledge just like I concentrate my investments on Tesla. If you've invested in Rivian, then you may have done more research than me and have a better understanding of the company and potential than I do. I'm basing my analysis on what I know about the EV industry in general and comparing with what I know about Tesla. And I'm presenting my opinion and some of my thoughts on that basis alone, although I have still been following Rivian for years. If you have invested in Rivian, then by all means, please comment and let us know why you think this company warrants such a high valuation. I'm going to go through my analysis and see what I can work out and think it all through, rather than just being ready to say how ridiculous this valuation is, and anyone who buys it is crazy. Rivian have raised about $12 billion from their IPO. Make no mistake, that is an enormous amount of money, but that's pretty much got to last them until they can solidly prove to the market that they are capable of making volume production EVs at a profit, something no one else other than Tesla has achieved to this date. At the time of this video, the valuation of Rivian is in excess of $110 billion. The first time Tesla reached that valuation was only 20 months ago. Tesla was at a run rate of over 100,000 for a quarter then, which is over 1,000 vehicles a day. Rivian are at a run rate of just 2 vehicles a day last I heard. Tesla was literally making 500 times as many vehicles at the same valuation. Tesla proved they could achieve volume production when it had this valuation. Tesla had been through production hell and come out the other side, a time when Tesla nearly went bankrupt. When Tesla was this valuation, we had validation that Tesla can make EVs at volume. Oh, and not only that, this was achieved with a 25% gross margin, even back then. Of course, demand had been proven, and there was also this thing Tesla had called FSD and autopilot, along with a supercharging network to support their customers. Yes, clearly Tesla was underpriced at this stage too, and the market had not yet realized EVs are the future. Obviously the market realizes now and has a better understanding of the potential of the EV industry, along with how profitable they can be. But most investors were too late and missed out on the Tesla run, and that doesn't sit well with them. And now they've learned from this. No way they're going to make that mistake again. They're going to get in early on Rivian, and Lucid too. That's another one with a very high valuation. Therefore, we're seeing all this FOMO money pour into these new EV startups. Hey, they can ride this thing all the way to the $1 trillion valuation. 10x return in 10 years maybe. That's a great return. Tesla's broken $1 trillion already, and Tesla haven't even made 1 million cars in 1 year, and likely won't this year either. But now Rivian's CEO claims they can achieve 1 million vehicles a year by 2030, announced conveniently at the time of the IPO. Right, well, if Tesla are worth over $1 trillion, just about hitting 1 million a year, therefore Rivian should be a $1 trillion company when they hit 1 million run rate in 2030. Like I said, 10x return in 10 years. That's a great return, if that's the theory. Except Tesla are doing it as the leaders in the market, with what will likely be a growing market share when in-house battery production ramps up, along with new factories opening up. Tesla are going to eat up more EV market share, leaving less for everyone else. Added to that, the inception of robotaxis, which might mean every one robotaxi can replace 5 EVs, which means there'll be even less market share. But alright, let's do some maths then. If it's a $100 billion valuation now, with 1 million cars a year targeted by 2030 and discount it back from there, we're not factoring in inflation. To sell 1 million vehicles a year, then we would have to have significantly reduced average selling price. In Q3, Tesla had an ASP of $50,000 per vehicle, with a run rate of just about 1 million. Of course, it can be argued that Tesla offers so much more value with their software. On the other hand, we don't know what Rivian might have achieved by 2030. Rivian have a lot of money, and I would say they're going to try and follow Tesla's path of vertical integration, including in-house batteries. It's their only chance to get decent margins, or a profit. Perhaps they achieve a 30% gross margin by then, which at 1 million cars a year at $50,000 each would mean a total gross profit margin of $15 billion a year, which is where Tesla was at in Q3. If OPEX was similar to Tesla's, then that's $8 billion net profit. Factor in, we're not talking about today's technology, and we would hope and assume that the price of batteries has reduced significantly and energy density improved too. Rivian have nearly 10 years of new technology to work with, but the volume production thing, that every other EV seems to be struggling with this, including companies that have been making cars on production lines for literally over a century. What is the magic Tesla are doing that no one else can? And a $50,000 average selling price may be achievable now due to such low supply and such high demand and much less competition. But when there are robotaxis and the $25,000 compact Teslas for sale, and all Teslas will have amazing FSD by then, according to Elon, everyone is going to want FSD, and I believe him. Rivian will have to eventually adopt Tesla FSD, as will every other vehicle manufacturer, to have any chance. Will Jeff Hu succumb to Tesla FSD and admit defeat? Amazon do only own 20% of Rivian, so it's not really up to Jeff. But he has sway when it comes to Amazon van orders. But having Amazon vans with FSD is obviously a huge benefit to Amazon too. But even if Rivian made $10,000 per van, which would be unlikely, then that's only $1 billion of gross profit, and significantly less when it goes into net profit, which may have sounded good a while ago, but Rivian has $12 billion in capital now. They don't need an Amazon order to see them through. Although, as Rivian are not taking the same financial responsibility as Tesla due to this influx of capital, they're throwing money at things and hoping something will stick, rather than Tesla building up a company as profitable as possible from the start. Well, Rivian have a burn rate of $600 million a quarter, which is about $2.5 billion a year. This is OPEX alone. Obviously, there'll be more costs now they finally started manufacturing cars, most likely at a loss. Rivian needs something around $2.5 billion in gross profit to cover this just to break even. If Rivian can get to 100,000 units a year, and even then they need to be making $25,000 gross profit per vehicle to cover their OPEX. Of course, that's their OPEX today without making any vehicles. And Rivian have a really long way to go until they can produce 100,000 units a year anyway. This is probably what concerns me the most about the company. It's really hard to do volume production, and even harder at a profit. I guarantee Tesla will deliver 100,000 of their vans before Rivian delivers 100,000 Amazon vans. You see, the legacy autos EV finances are all hidden and consolidated in their ICE businesses. The great thing is we finally get to see another EV with full transparency, and we'll get to witness just how hard it is for someone other than Tesla to try and do something remotely close to what Tesla has achieved. But this is what the legacy companies are facing too, except they have all these legacy executives in the way as well, with old ways of thinking. At least Rivian are all in on EVs and don't have the car dealer network. Yet as far as I'm concerned, this is already a terrible start to have OPEX that high. They're not taking accountability for their finances. They're just throwing money at it and hoping it will be okay. Tesla had OPEX of about $1 billion a quarter in around Q2 2019, and Tesla were doing 100,000 vehicles a quarter then. Just to put it into some comparison, and Rivian are at a run rate of about 200 a quarter, and their OPEX is over half as much. This is a strong headwind to contend with, but this is the whole throw the money at the problem and see if it sticks investment we have here. I mean, it's even worse for legacy companies, as they're throwing $30 to $50 billion at it. But at least they do have an ICE business to subsidize this, at least for now. But unlike Tesla back in the day, Rivian has Amazon to back it up, right? Amazon owns 20% of Rivian, so it has a solid backer. Or at least that is what we often hear. Almost like it's an Amazon product and has the full force of Amazon behind it with unlimited funds, compared to Tesla, who had to fend for itself. But Tesla was also backed by multi-billionaires. Larry Ellison was a big investor in Tesla, but no one ever said anything like, well, Tesla has the backing of Oracle. People talk about it as if there is any issues, then there is a bottomless war chest of Amazon funds. But is this truly the case? If Rivian cannot scale up to volume production, which is something I personally highly doubt, particularly when their products are such big complex vehicles, Tesla never hit volume production on the X or the S, at least by Elon's definition of the word. Elon also weighed in on Twitter, hoping Rivian can make it, but he sounded somewhat skeptical, knowing just how truly hard this task is. If things are not looking good for the company, and they're running out of funds, is more capital even going to help? It will be a lot of capital required. Do Amazon shareholders want to invest in something that's losing a lot of money, can't scale to volume production, and can't make a profit? Is Amazon going to give Rivian a loan? Doubtful. What if Amazon buys more Rivian shares? Okay, sure, from a current shareholder. Well, those funds would just go to the shareholder, who sold shares to Amazon, not Rivian. Rivian would have to float more shares on the market, which Amazon would then have to buy, or the public. I think this rhetoric of Rivian being an Amazon-backed company isn't quite what people think. What else could Amazon do to help? Order another 100,000 vans? Or perhaps Jeff gets personal and loans Rivian money, as he doesn't want to be defeated by Tesla. I guess the multi-cent billionaire rivalry has no rationality. Again, probably not that likely. Can we also compare this to NIO too? At the time of this video, NIO has a $65 billion valuation. NIO has successfully made over 100,000 EVs to date. They have got their price point down to a competitive level with a more mainstream vehicle. Rivian's valuation seems a lot more expensive when compared to NIO. At the time of this video, Lucid also has a higher market cap than NIO too. What is it about US EV makers that give them so much more perceived value? Now, don't get me wrong, I'm not trying to hate on Rivian. The fact of the matter is, they make a beautiful looking truck. In fact, aside from the Cybertruck, I think it truly is the best looking pickup truck on the market. And the fact it's electric makes it even better. But the best EV engineers went to Tesla. Also, they got employee-based compensation and have made a fortune on their Tesla stocks, which I think is a good incentive for them to stick with Tesla rather than being poached by Rivian. Also, great minds would rather work on great innovation with great resources, which Tesla provide to a level like no other company. It's not just about a higher salary for some people. Oh, and are we forgetting something too? When Tesla was a $100 billion company, there was virtually no competition. Whereas Rivian is ramping up, they have Tesla in the way. And that's just Tesla. We have legacy auto companies all claiming they'll hit 1 million units too. Except they claim they can achieve this by 2025, or even earlier, for Volkswagen most likely, who are already about a third the way there already. Except Volkswagen's valuation is only slightly higher than Rivian's at a US $130 billion. Not to mention a highly profitable ICE business to supplement that. But the electric vehicle market is growing, and there's plenty of room for more competition, as the real competitors are the ICE vehicles. Well, maybe, but these vehicles, including the Model X, they're expensive, in a market segment that can saturate a lot easier due to much less demand, and the margins are so good the supply can meet it faster when compared to the equivalent of a compact Tesla. Which is partly why Rivian is going for this upper market segment. Besides, the Model X is an SUV, whereas Rivian are making a pickup truck first. Except Tesla are also bringing out a pickup truck within a year or so. The Cybertruck will destroy the Rivian for value for money, along with a lot of other features, and I think it has a chance to produce 1 million a year. Therefore, there'll be plenty of supply for EV pickup trucks of better value. Why would a consumer want a Rivian over a Cybertruck or F-150 Lightning? Well, Rivian have niched themselves as more of a lifestyle, outdoors type pickup truck, and they have some great features and accessories. But like I said, it's more niche, which means less demand in the first place. Anyway, what am I talking about? If Rivian are selling 1 million a year, then it's not going to be their pickup truck or SUV. There isn't enough demand for those at that price point. It will have to be a more mainstream vehicle. I would say most likely a crossover, a miniature version of their SUV. But then do Rivian niche themselves again with this whole lifestyle application, or do they just go mainstream and compete head to head with the Model Y? Rivian will have the advantage of the $8,000 tax rebate, which will help them for the next 10 years. Except their current products don't qualify for this, as this rebate was to help legacy autos, well, the unions, something that Rivian doesn't have. It will be a long time until they produce a car that qualifies for this rebate. When Tesla were building out their Model S, it was the only model to concentrate on for some years. Rivian has this pickup truck, SUV, and a van, pretty much all at the same time. I think this is going to make things difficult for them. They're obviously going to be battery constrained too, but managing 3 production lines at once, when you're so new to this, is basically 3 times as hard, if not more. Also, this order from Amazon may look good for Rivian, 100,000 vans, brilliant. Except this is at a sacrifice of perhaps 100,000 other cars. These other cars should be in the private passenger vehicle industry, trying to gain market share before the EV industry saturates. Now, instead of Rivian making a sedan or crossover to get their market share up for the end user, instead they have to make some vans for Amazon, and a lot of them. It will take them a lot of time to make that many vans. And adding the extra production line for the van, well, it's hard enough for them to focus on one at this stage. But the point is, what about the batteries? These vans will eat up the batteries that could have been used in other vehicles. The Amazon vans are already antiquated before they are even made, as they do not have FSD. Amazon's vans, get this, have to use a driver, which costs a lot more than any van does, even if it doesn't have to pay for gas. Tesla's vans will probably not have pedals or even a steering wheel. There is no way Amazon can get close to Tesla FSD. I'm sorry, but if you think this is a possibility, you don't believe me? Well, how about we have a rocket comparing contest? In other words, if Rivian made it this far, then all their customers are likely paying Tesla $200 a month for FSD. To summarize, perhaps if Rivian are able to achieve 1 million units a year and hit volume production, whilst achieving a 30% margin and sell all the vehicles they make, and they adopt Tesla FSD and use Tesla charging network, and the market is not saturated, and maybe Amazon keeps buying more vans, then they may squeeze $8 billion profit a year, and with a PE ratio of 50, then that is a $400 billion valuation. I think that PE is generous though, as I imagine the market to be fairly saturated by then. If not, then there may only be room for Rivian to perhaps eventually stretch to a further 2 million units a year, but I feel that's really unlikely. So in my opinion, a P ratio of 30 is more likely. Unless perhaps they can one day create their own FSD, but who would want to use it first when Tesla has already a faster and safer version? What's the point? Implying I see a valuation of around 250 billion for Rivian by 2030, unless they end up getting into battery storage business too, but it sounds like they're going to be struggling enough to produce enough batteries for these cars as it is. Of course, they have to do all this remaining solvent. They may have $12 billion, but that likely only buys them a few years to get there. This is where I see the biggest hurdle. And if and when they exhaust these funds, well, the company probably isn't looking terribly profitable or successful, which means the stock price is likely down a lot, meaning it will be a lot harder to raise capital, and they may need a lot of capital by that stage. This might mean that Amazon does step in and take over the company possibly, and perhaps that's Jeff's plan all along, or perhaps by then it's clearly obvious that they just don't have what it takes to achieve profitable volume production. Okay, that is a lot of ifs, with a potential upside of perhaps 4 times your money. That's 4 times your money by 2030 though, if everything goes to plan, which so far it certainly has not, with a downside of losing it all. If there is a chance at losing all your investment, you want a better upside. So why not just buy more Tesla shares that have a strong possibility of 10xing by 2030, or maybe 2025, without the downside of losing it all, but highly likely to have increased in value a high percentage than Rivian by then. But not all investors realize that. They think Tesla has already matured, as it's over $1 trillion now. Not much room left to go. Even if it became the same value as the largest company in the world, it's only double your return. But what these people fail to realize is that Tesla, well, they've barely gotten started. Also, Tesla has one other little element Rivian doesn't, that goes by the name of Elon Musk. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.